Can you hear me? Good morning.
Good morning, can hear you, sir.
Yeah, good morning, everybody. Yeah, we are welcome to today's class.
Yes, good
So,
morning, sir.
good morning. Yeah, in our last class, we were able to deal with capital allowance, and we also look at some illustration. So today we'll be moving to another interesting topic, which is what? Loss relief. We'll be moving to loss relief today. Yeah. So as a business enterprise, when you make profit, it is expected that you pay tax. So what now happen when loss is being made? If a business now make a loss, do we expect that the government should return that money back to what? To the company, or how is the loss being made by what? By
So
such
give me
company?
my power bank.
Hello, Ineka. Mute your mic. Oh. So do we expect that such a company or individual, such a taxpayer, do we expect that they are also going to what? Going to get back the money from the government? So how is that going to be taken into consideration? That is what gave rise to what? This loss relief. So what do we mean by this loss? So when does loss arises? So loss will arise when the total allowable operating expenses of a company exceed what? The accessible income or profit in a particular year. When the total allowable operating expenses, look at that word, total allowable operating expenses. So that means for this loss we want to talk about, it is not the one prepared by what? By the financial accountant. Simply, it is the law that is arrived at as a result of what? Adjustment made by what? Made by the tax authority. So because not all expenses that is included by what? By the financial accountant will be what? Will be allowable for the purpose of tax. So it is when all the what? Allowable operating expenses is more than the accessible income. We already know what is an accessible income or profit. That is what the totality of all the income from where? From all sources. So when you total all the income from all sources, you now remove what? The expenses. By the time you remove the expenses, if what is available is not a profit again, if it is now what? Also giving us a negative figure, that's when what? We have what? We said what? A taxpayer what? A taxpayer generate loss. So when this loss is made, the provision of the tax law provide that what? This loss can be relieved in line with what? In line with certain rules and regulation. So that is when what? When we can have what? A situation of what? Loss arising in what? In a business entity. And what are some of the reasons that can make a business to incur losses? So one of them is what? Economic recession. So when there is economic recession, when the economy is not buoyant, so as a result of that, a lot of companies will be facing what? Financial challenges. So which may also affect what? Their financial record. So low patronage from customer. When customer don't buy your product, so you just have the product idle in your warehouse. As a result of that, you may not be able to record a lot of sales to cover what? All your what? Expenditure. So loss of goodwill by company's product. Your company, your product is very known to what? To customer before. But customer has what? They have what? They have reduced their what? Their patronage, or they have reduced their what? Loyalty to what? To that your product. As a result of that, it may also what? Affect your what? Your transaction, which may end up what? Making that business to what? To incur loss. Pandemic. So when there is what? Then there are unforeseen circumstances. So unforeseen circumstances can also make a what? A company to what? To make losses. So they will also have a government directive or legislation. So when government make a directive that affects the product produced by that company, so because it's affecting the product, it will also affect the sales, which will end up affecting the profit that will be reported by the taxpayer. Then we have obsolete products due to technological change. When your product is old, so it has become obsolete. So customer will not they will not patronage they will not buy your product again. As a result of that, it's going to affect your It's going to affect your sales, which will end up. So by the time your sales reduce, that means what you have will not match up with your expenses. As a result of that, loss will be reported by such businesses. So what do we now mean by this loss relief? So as I said earlier, when a taxpayer make profit, it is expected that tax is expected to be paid on that profit. So when loss is now being made, so there should be a way that that taxpayer is also going to be compensated. That way that taxpayer is going to be compensated when loss is being made is what is called loss relief. So the way you are going to compensate the taxpayer when they make a loss is called that process is called loss relief. The same way when you are making a profit, you are going to pay tax. So when that loss is made, so the way they are going to compensate you for not paying tax is called loss relief. So the process of loss relief is that when a loss is being made, you are going to that loss is expected to be deducted from where? From the profit. From the profit in in a particular accounting year. So that loss you are deducting from the profit from subsequent year of assessment is what is called that process is what is called loss relief. So in simple terms, the process of deducting loss made in a particular accounting year from profit in subsequent year is called loss relief. So that process is what is called loss relief. So what are now the conditions? So what are the conditions to be made before the condition to be met for loss to be deducted? So what are those conditions that must be available before a taxpayer can deduct can relieve loss? So there are certain conditions that must be available. So one of them is that the board must be satisfied that the company in any trade or business has incurred the loss during any preceding year of assessment. So the company must be satisfied. Andrew, please mute your mic. Oh, thank you. So one of the conditions that must be met is that the board must be satisfied that the company in any trade or business has incurred the loss during any preceding year of assessment. As I said earlier, by the time you are preparing your account as a financial accountant, you are going to record all your expenses. It's not all those expenses that are allowable. So the only those that are allowable for tax purposes is what you are going to consider to determine whether a business is making a loss or not. So what that means is that there must be a justification. There must be a satisfaction by by the relevant tax authority. So this word board means the relevant tax authority. So the relevant tax authority must be satisfied that truly that particular taxpayer has generated a loss in the preceding year of assessment. So before it can be relieved. So another condition is that the loss can be carried forward and deducted from the same trade or business without restriction on period. For the purpose of relief or losses, so there's nothing like restriction of the loss. Unlike when we have capital allowance, when we did capital, I told you that your capital allowance is restricted to 66 2/3 of your assessable profit. For loss, there is no restriction on loss, provided the accessible profit generated by the taxpayer can accommodate the loss, you are not expected to relieve any amount from there. So when you are not expected to restrict that amount of loss from your accessible profit. So if the accessible profit can accommodate the loss, so you can deduct all your losses from your accessible profit. So in essence, what the law is saying is that there is no restriction on loss relief. Then the loss sustained by a non-resident company that indigenized its Nigeria operation shall be deemed a loss of the reconstituted company in trade or business during a year of assessment commenced trade. So what it means is that a company, there are some companies they call reconstituted company. So what are those reconstituted companies? Those are companies that has been in existence that has been operating in Nigeria, but are not incorporated in Nigeria. A company that has been operating in Nigeria but not incorporated, not registered in Nigeria. So they are operating as As a non-resident company. So when that company now decide to incorporate, they now decide to register with CAC to be doing the same business that they have been doing before that incorporation. What I'm saying is that a company has been doing business in Nigeria without registration. They are operating as a non-resident. But now they decided to register in Nigeria to continue that same business that they have been doing without that same business they have been doing before that incorporation. So such company are regarded as as reconstituted company. Any loss made by them in their old business before they decided to incorporate will be deemed to be to be the loss of of the new incorporated company. So that's what they mean by So is also one of the conditions that are available for loss to be relieved by a company from their accessible loss to be relieved. So what we after is what are the types of losses that a taxpayer can relieve? What are those types of losses that two type of loss relief are available to taxpayer? We have what? We have the carry forward loss relief and the current year loss relief. So those are the two categories of losses that can be relieved by taxpayer. Carry forward and current year loss relief. Each of them relief. So which is what? The first one, which is what? Carry forward loss relief. So carry forward loss relief. So a carry forward loss relief is available to all taxpayer. And as we all know that we have two categories of taxpayer. As a taxpayer, it's either you are an individual taxpayer or you are a corporate taxpayer. So in essence, carry forward loss relief is available to all category of taxpayer. So it is available for all category of taxpayer. And this particular loss relief has the following characteristics. So one of the characteristics is that there is no you don't need any written application before it can be granted. You don't need to apply to the relevant tax authority before you are going to be before you can relieve this loss. It is automatically granted. So there is no written application that has to be made to the relevant tax authority because it is automatically granted. Once it is established that a loss has been made, you can remove that loss from your subsequent accessible profit. You don't need to write to the relevant tax authority. So the relief is done on preceding year basis. So the relief is done on preceding year basis. So it's done on preceding year basis. So that means what that means is that loss that is being generated in what? In 2020 year will be available for relief in what? 2021 year of assessment. So it is done on what? Preceding year basis. So another condition is that what? It is relief against future income from the same source. This particular loss, this particular type of relief is available from the same income from the same source. That means, our accessible profit is what? Income generated from all sources. So when you have different sources of income, so the loss that you are making from a different source can only be relieved from that same source under what? Under carry forward loss relief. Then we have what? The loss of a source shall be available for relief against future profit from the same source indefinitely, except for individual taxpayer, which is restricted to maximum of 4 times, after which any unabsorbed loss shall become lapse. What the law is saying is that what? The loss you are making from where? From any source shall be available for relief indefinitely, which is supposed to be available in 2021 year of assessment. By the time you don't get to 2021 year of assessment, if there is no profit in 2021, you have a right to transfer that same loss to the next year, to 2022 year of assessment. Also, if there is no profit in 2022 year of assessment, you also have a right to transfer it to 2023 year of assessment, and so on and so forth. So in essence, you have a right to transfer losses that is made in a particular year of assessment to what? To subsequent year of assessment indefinitely, provided what? Provided there is what? There are profit to what? To relieve those losses. So the only one that is having restriction is what? Only individual taxpayer. Individual taxpayer, they have what? Only 4 years to what? To carry out what? To carry out what? The losses forward. Only what? The losses can be carried forward for a period of 4 years. That is only available to what? Individual taxpayer. So those are the conditions that are available to be for what? For carry forward loss relief to be what? To be made. So take note that what? It is available for what? For all category of taxpayer. No what? No application is required. Then after the carry forward loss relief, the next category is what? Current year loss relief. Current year. So this particular loss relief is only available for what? For individual taxpayer. Take note, it's only available to individual taxpayer. Only individual taxpayer can benefit what? This particular form of loss relief, which is what? Which is current year loss relief. And it has the following characteristic. It is not granted automatically. You have to what? You have to make an application. You have to write to the relevant tax authority within what? Within 12 months after the end of the year of assessment. So an application must be made to the relevant tax authority for this particular what? Form of loss relief to be what? To be adopted. So that is, you must tell them that, yes, write to them that, okay, you made a loss in a particular year of assessment, and you want to relieve it on using what? Using current year process. Then it is applicable to what? Only individual taxpayer. As stated earlier, the loss of a source can be available for relief against all income of that taxpayer from all sources in the year of the loss. Furthermore, any balance of loss that is not fully relieved or recouped of source shall only be relieved against future income of a source of the law. So what the law is saying is that the loss you are making in a particular year shall be available for relief from all sources of income only in that year of assessment. So the law you are making from a source shall be available for relief. The loss you are making from a source shall be available for relief from all sources of income. Let's say as an individual, I have what? I'm doing a business. That means I'm going to have income from trading income. I also have houses that I rent out. So that means I'm going to have rental income. I also have what? Money that I deposited in the bank. That means I'm also going to receive what? Interest as an income. Which means I have income from what? From trading. I have income from rent. I also have income from where? From interest. This total income, these three sources of income. So the law gave me a right to relieve any loss I make from any source, from any of these three sources, to relieve it from where? From any other source in the first year in which that loss occur. I can only do that in the first year in which that loss occur. After the first year, I only have a right to relieve that loss from only the source of income. So after the first year, you can only relieve it from only the source of income where the loss is being generated from. So you can see the difference between what? The current year and the carry forward. So current year, you have a right to relieve your loss from where? All sources of income in the first year. After the first year, you can only relieve it from where? From all sources of income. Then why the next is that what? The period for carrying what? For carrying losses is limited to a maximum period of 4 years, after which the loss shall become less. So you have what? Only a period of what? 4 years to carry forward the loss. After the 4th year, so any balance available will cannot be carried forward to the next year. So one basic thing that you need to know is that the relief is what? Is available on what? Actual year basis. So this particular relief is available on actual year, unlike what? The carry forward that is available on what? Preceding year. So that means a loss that is made in what? 2020 year of assessment will also be available in what? For relief from also what? In that what? Year 2020 year of assessment. So that is what? On what? Actual year basis. Basically, so the difference between the two is summarized here. So the difference between what? Between carry forward and current year loss relief. So losses can be recouped against or income derived from all sources of not restricted to the same trade in the first instance. So as I said, in under the current year, you have what? A right to relieve it from all sources of income. So why for carry forward, you can only relieve it from where? From only that source where the loss is being made. So forward for carry forward loss relief. Ayodeji. Thank you. Then also the relief is there is a need for a written claim as relief. Why under carry forward? No need for what? For application, it is automatically granted. So then under the current year, deduction is to be made after the addition of what? Balancing charge applicable since what? Relief is what? Is granted against income from all sources. Why under what? Under carry forward. So deduction is to be made before what? Before the addition of what? Any balancing charge. So because what? Loss is available against what? Only the source of income. So when we did capital allowance, I made mention of what? Balancing allowance and balancing charge. Who can tell us what is the difference between balancing allowance and balancing charge? So what is the difference between balancing allowance and balancing charge?
Balancing allowance is a relief on loss on sales of assets, while balancing charge is a charge on gain on sales of assets.
Okay. So balancing allowance is what? It's an additional capital allowance. Why balancing charge is what? It's an income, additional income, as a result of what? Disposal of what? Of assets, of your asset. So when you dispose any asset, any balancing charge, which we said is an additional income, you are going to add it to what? If there is any balancing charge, you are going to add it to your accessible profit before you relieve your loss when you are adopting what? Current year loss relief. That is, what that means is that what? For current year loss relief, your balancing charge, so I'm coming. For current year loss relief, just give me some. So let me illustrate what I'm saying here. So let me illustrate it here. I'm coming. So for your balancing, I'm coming. Oh, just give me some minutes to come up. Okay. So, okay. So what the law is saying is that if you're assuming if you're adopting current year loss relief, because the tax law gave you an opportunity to relieve your loss from all sources of income. What that means is that what if after arriving at your accessible profits, after you arrive at your accessible profits, if you have any balancing charge, you are going to add that balancing charge to the accessible profit. You add it to the accessible profit. So to get what? To get total income. To get your total income before you relieve your loss, before you now less loss, before you now say loss relief, before you remove the loss. So this is what if you are adopting what? If you are adopting current year loss relief, because the tax law gave you an opportunity to what? To relieve your loss from where? From all your sources of income. But if you are adopting the carry forward method, so what that means is that they said you can only relieve it from only the source where the loss is being generated from. So what that means is that you are not going to, you first of all relieve your loss. You first of all remove the loss from your accessible profit. You will remove the loss from the accessible profit before you now add your balancing charge. So this is what? So this is for when there is what? When you are adopting what? The carry forward loss relief. So what this tells you is that what? Please, when you are computing for what? So when you are computing for company, you know under company, so company you can only adopt or carry forward loss relief. You are going to what? Follow this procedure when you are computing what? Tax liability for what? For company. So let us take note of that and be what? And note that. So that's what? That's what they are saying under what? Under that difference between what? Between what? The carry forward loss relief and current year loss relief. Then this one is claimable only by individual. So why the carry forward is applicable to all taxpayers, both what individual and company. Then why current year is available on what actual year basis. Carry forward is available on what preceding year basis. So those are the major differences between what between current year and what and carry forward loss relief. Then what that means is that there is also the law gave priority to what? To loss relief before what? Before capital allowance. So what it means is that you can have a question that will have what? Both capital allowance and also have what? Loss to be relieved. Please, when you have a question that is having both capital allowance and loss, what that means is that what? Is that loss is going to what? Is going to be relieved before what? Before you consider what? The capital allowance. So you are going to consider the loss. You are going to relieve the loss before what? Before you consider what? The capital allowance. And there is no what? no restriction to what? To loss. So all the amount of the losses will be what? Will be relieved. Unlike what? Capital allowance that is usually restricted to what? 66 to third of what? Of accessible profit. But in the case of what? In the case of capital, in the case of what? Loss, no restriction to what? To loss to be relieved. So provided there is what? There is profit, you can what? You can remove all what? All amount of your what? Losses from where? From accessible profit. Then you also have a carryback of a loss at a cessation of business. This is what is called. This particular situation is called terminal loss relief. So when a business is ceasing operation, we made mention of something relating to that when we did capital allowance, which I explained that when a business is ceasing operation, they have what? They have an opportunity to what? To recover back their capital allowance backward for a maximum of what? Period of 5 years backward as a result of what? Cessation of business. Also for loss, when there is what? Loss during cessation of business, it is possible that a company has been what? Has been carrying forward loss. They are yet to what? To recover, to recoup that loss. So if they now decide to, or as at the date of cessation, they what? They generated a loss. If there is a law that is made as at the date of cessation, please take note, such loss is not going to be available for relief again. That loss will become what? Will become a permanent loss to what? To the company. That loss will be regarded as what? As a terminal loss, because what? The law does not what? Does not give them a right to what? To now go to the government and say what? Government must pay them back their loss. The only reason they can recover back that loss is to what? To relieve it from there, from their future accessible profit. But because they are now stopping their operation, any loss they make as at the last day of operation will be regarded as a terminal loss, which cannot be recovered again. So it will become what? A terminal loss to the company that they have to what? They have to bear at the date of cessation. Then, so what is the advantage of what? Of loss relief to taxpayer? The major advantage is what? Consequential reduction for profit of a year or future year. This has a major impact on total taxable profit, the corresponding cash flow advantage for a taxpayer. So when a taxpayer is given an advantage to relieve their loss, they have an opportunity to what? To reduce the amount of tax they are going to pay. So when they reduce the amount of tax they are going to pay, that means what? It's going to make money available to them. Money they are supposed to pay as tax to the government will be what? Will be available to the company for to carry out their economy, to carry out their day-to-day activity. So those are the what? That is the advantage of what? Of loss relief to a tax payer. So any question? Any question? Any question?
Yes, sir. I want to confirm something.
Okay.
So, to please explain, said whenever there's question where we have both loss and capital allowance, that we have to consider one before one.
Yeah, I made mention of it earlier.
So I don't get that part.
Yeah, what did you say? I made mention of it earlier. That's what. Under here, look at it. Priority of loss over capital allowance. There may be a situation whereby there will be both losses and what? Capital allowance in a single scenario. Where you have that, you have to consider what? You have to consider the loss first. You remove the loss first from the accessible profit. Anything that is now available, that is left, is what is going to be available for capital allowance. You know, capital allowance, you have a right to what? To carry it forward, to also what? To subsequent year, to infinity. Also your law, but when you have the two, you consider your loss first before what? Before you consider capital allowance. So any other question?
Yes, sir. This carryback of loss and cessation of business, I didn't really get that one very well.
Yeah, what I'm saying is, as at the date of cessation, it is possible that on that date of cessation, instead of them to make profits, they make loss. or as at that date of cessation, they have loss that they have been carrying from previous year. They are here to what? To relieve it, because what? There is no profit to relieve that loss. As at that date of cessation, any loss they have, they cannot what? There is no place they can relieve it again. So what that means is that that loss will become what? A permanent loss to the company. It will become what they have to bear. It's going to become what? A terminal loss. Such loss, it is called what? Terminal loss. Because what? They have to bear that money, because there is no place they are going to what? Relieve it again from, because what? They are stopping their operation. It is going to be what? A terminal loss to the company. So that's what we mean by what? That loss as the date of cessation. Any other question? So any other question? So in the absence of no, so let us look at what? Illustration to illustrate what? The principle of what? This principle of what? Loss relief. So we are going to look at question number 1. Practice question. Question 1. Kunle, a sole trader, commenced business at Lakwe on 1 March 2016 and make up account to certain dates. The adjusted profit or loss of the business for the first few years of trading are detailed below. We have the period to 31/05/2017, loss. We have year ended 31/05/2018, profit. Year ended 31/05/2019. We also have a profit. Year ended 31/05/2020. We also have a profit. Those are the figures. We now say compute the total income of the taxpayer for the relevant year of assessment. Compute the total income of a taxpayer for the relevant year of assessment. So my first question now is this. What category of taxpayer is this taxpayer?
A sole trader.
It's a sole trader, Abi? Under which category of taxpayer does a sole trader fall into? Company or individual?
Individual.
Yes, it is what? They are individual taxpayers. It is under the category of and for individual taxpayer, they have a right to either use what? Carry forward or what? Current year loss relief. Abi? He can either use any of the two. But for him to use current year loss relief, that means he must have what? Other sources of income. But here we are not told that what? There is any other sources of income. We are only told of what? Adjusted profit from where? From his trading business. Because he's only having what? Only one sources of income. So you are expected to adopt what? The carry forward loss relief method. Is it clear to us? So in that case, because it's only having one sources of income, the fact that it's an individual does not mean you must adopt what? The current year, because it also has what? An opportunity to use what? Either the current year or carry forward. But because in the question given, it's only having only one sources of income, and it's an individual, it's going to what? Adopt what? The carry forward loss rule. Because of with that, it does not need to make any application. It will be granted automatically. Then how do we now adopt what? This current year, this carry forward loss relief method that I said it has to be adopted by the taxpayer. So how do we adopt this method? So when we look at the question, we are asked to compute the total income of what? For the relevant year of assessment. So as I told you, very important, the requirement, the name of the taxpayer, Kunle, then the requirement, computation, of total income for all relevant year of assessment. So computation of total income for all relevant year of assessment. So after that, if you look at the question, from the question, let me go back to the question again. So the question told us that this particular person, individual, commenced business on what? 1st March 2016. He commenced business on 1st March 2016. And his accounting date is as at when? May annually. Accounting date is as at May annually. And he commenced business on what? 1st March 2020. So I have accounting date to be equals to May 31st, May, 31 May, 3105 annually. And I also have date of commencement. Date of commencement. My date of commencement, the date of commencement, I have the date of commencement to be 1st March 2016. 1/3/2016. So those are some of the information provided by the examiner. For a company, so now to my question now is this. For a business that commenced operation on 1st of March 2016 with accounting date of May. So what do we think, what will be the first year of assessment? Who can tell us? Using our commencement rule, what will be the first year of assessment? A business that commenced business on 1st of March 2016, and accounting date happened to be 31st May annually. So what will be the first year of assessment for this taxpayer? Oh yeah. What will be the first year of assessment? Oh yeah, now I'm listening. First year of assessment.
Yes, I think 1st of March 2026 to
Yeah. First year of
2017.
assessment.
2017.
2017. That will be the next year, the year following the year of commencement. So we should be 2017. The basis period will now be when? From when? From the date of commencement, which is 1/3/2016 to when? When is the basis period going to end?
Accounting
One thing.
date.
And what is the accounting date? 31?
May
31st
31,
May
5,
2016.
2017.
20 what? 2016.
2016.
It will still be 2016. You want to jump 2016 and go to 2017? No, don't do that. So you have to work. Because you can still see May in 2016. So you have to work. Stop at 2016. Then how many months is this? From March to May. How many months is this?
3 months.
3 months, 2017. If you go back to the question, we are giving period to 31/05/2017 to be lost. We are giving period to 31/5/2017, which is starting from date of commencement 1/3/2016 to 31/5/2017. How many months is this? From 1/3/2016 to 31/5/2017. How many months is
15,
this?
15
Yeah?
months.
15
15
months.
15
months.
months.
15 months.
Do
Yes.
you all agree it's 15 months? So we
Yes.
have it to be what? 15 months. This is 15 months. In which what we are given to be a loss of, we are told that it's a loss of what? 1,289,400. Loss of 1,289,400. Loss. So, and I only needed what? 3 months, Abi? This 3 months that I needed, I can find it in this period. Abi? So we only needed 3 months. So because we only needed 3 months, so the next thing for you is to say your 2017 will be 3 divided by 15, multiply by the value, multiply by the loss value, 1289,400. So that will give us how much? 1289,400. So that will give us 257,880. So that will give us a loss of 257,880 in jacket. A loss of 257,880. So which is a loss. So in 2017 now, so we now come here, you now have loss for the year. So you have what? Because it's a loss, you have 257 in jacket, you have 257,880 in jacket as a loss. So out of this loss, you now say loss relief. How much can we relieve from this amount? You cannot relieve any amount. Why? Because we don't have any profit in that year. So because we cannot relieve any amount in 2017, this same loss now will now be carried forward to, so it will now be loss carried forward. So this same amount will be carried forward to the next period. In that case, so you close this up. So you close this value up. So this loss of 257,880 will be taken to the next period as what? Loss carried forward. So which is what? Which is this amount. After 2017, so the next tax year will be what? 2018. For 2018, what will be the basis period? Who can tell us? What will be the basis period for 2018? Basis period 2018.
First
First of
One what?
June, 1st of June,
1/6.
2016,
20 what? 20 what?
2016
2016 to when?
to
31st of
31st May 2017.
2017. Yeah, thank you. That is correct. So these are working 1, 2. So this is 3. Then this is 4. So I need, how many months is that? 2018. How many months is this? 1/6, 2016 to 31/5,
12
2017. How
months.
many? 12 months.
12 months.
This 12 months, I can also find it in these 15 months.
Yes.
So you just say it's equal to 12 divided by
Over
15,
15.
multiplied by the loss value. 1289,400. So that will give us a value of 1031,520. 1031,520. So which is that value? So in 2018 now, before you consider anything, so you now say loss brought forward. So loss you are bringing from 2017, this same amount, you bring it forward to 2018 to be loss brought forward. In 2018, the taxpayer did not make any profit. It also generates a loss. You say loss for the year. So this amount of loss that you now calculate for the year, which is what? 1031,520. So will be considered in what? In 2018. So when you now add the two, so the two will give you what? Total loss. So this will give you what? The total loss for this year of assessment. So this total loss now, no profit yet. So we don't have any profit also. So our total, because the company say we should calculate total income, I'm supposed to state it here in this place. So let me go back to this. So this place now, I'm supposed to put total income. The question asks us for total income. So in this place now, I'm supposed to have total income for 2017 year of assessment. Total income will be what? Will be nil, because there is no income. So you have nil. So also, this loss in 2018 now, this total loss now, No income to relieve this loss from. So this total loss will be what? Loss carry forward. So you also carry it forward to the next period. This same amount will be carried forward to next period. So we close this. So you underline this one. Then you also. So total loss, you underline this. Then we close what? Loss carry forward. We close this as what? As loss carried forward. Then after this loss, so we have a total income. So total income will still give us a nil because there is no profits. Then in 2019, now we now go to 2019. What will be the basis period in 2019? Who can tell us basis period in 2019?
1st June
Once
2017
2017 to when?
to 31st May
31 5
2018.
2018. Yes. If you look at this information, if you go to the question, you have this, we are giving this information by the examiner. Year ended 31/05/2018. We are giving that value. We are giving that value. Year ended 31 to be what? 545,205. So you now, so for this period now, you have what? Accessible. So you have what? Accessible profits. So we are giving, the company has now made a profit of 545,205. They have made a profit of 545,205. So this profit, this profit now, you now say loss brought forward. This same amount of loss that you carry forward from this period, you bring it forward as what? As loss brought forward here. So you bring it forward here as loss brought forward. So this loss you brought forward, you now relieve. You are going to relieve part of it. So you now say loss relief. How much can we relieve from this loss? You can only relieve in relation to the amount of accessible profit. So you have what? Accessible profit of 545. So this amount now will be relieved from this loss. This 545,205. You are going to relieve it from this loss. So you also transfer it here. So you transfer it here and remove it 545,205. 205, you remove it from here as what? As loss relief. So after you relieve it, because you cannot relieve the total amount here yet. So the next thing for you is to what? So you know what? So the balance will be what? Loss carry forward. You carry it forward to the next period. So the balance between this, which is this, minus this, we give you what? Loss carry forward. So this amount will be carried forward to next period. You carry forward to next total income. So your total income will now be what? The difference between this and this, which will still give you what? Nil. So you can see that because of the loss being generated by the company in previous year, in 2019 year of assessment that they are able to make profit, they are still not going to what? They are still not going to pay tax because what? They have outstanding losses that has been made that what they are going to relieve from their accessible profits. After the 2019, you have what? 2020 year of assessment. So 2020 basis period will now be what? 1/6/2018 to 31/5/2019. So if you check the question, based on the question also, you have what? The information as well. Profit of 210,945. You have profit of 210, accessible profit of 210,945. So this accessible profit, you also, before you recover it, so you consider the loss. So you say loss brought forward. How much are we bringing forward? This same amount, 2,866,1,125. This same amount will be brought forward. From this amount that
Sorry,
we are brought
sorry,
in.
sir. The 2019 that we did, I thought the
Okay.
profit is supposed to be deducted from the loss. But
Yes,
what I'm
now,
saying
yes.
is, but what we have is an addition.
It's not additional. This is
The Excel will
this
make it an addition because the minus in that 55, if you use it, we're having
in which
28
55.
545,000.
Okay. Yeah,
Yes.
okay.
Uh-huh.
So this is this is okay. It's supposed to be this plus okay. Is
And
the way it's the way
Yeah.
okay plus.
You-
Thank you.
Okay.
yeah,
So
and, al-
it's not yeah.
and
It's
also,
correct
sir,
now.
I want to, sir, sir, in 2018, I want to understand because with the loss that we carried forward, is it not
Okay.
the total loss that we are supposed to carry forward? And the total loss I understand to be if you add the loss for 2017 and 2018 together,
Yeah.
you'll be having 1,289,400.
280.
Not two,
Yeah. What do we have here? It's the addition.
it-
It's the way this thing is being added. So what we are supposed
so
to add here, what we are supposed to
it's,
have here is this same amount.
yes, yes,
Is this Z that is adding it anyway? So is this amount is what we are also supposed to bring forward here?
carry forward. Yes,
Yeah,
sir.
as brought forward here. Yes, thank you. So we should now. So what we are going to have here will be 744,195. So you have it at 744,195. So this same amount now, loss brought forward, this loss, before you can, this amount, so you also relieve it. So loss relieve. Because there is no restriction to the amount of loss you can relieve. So you remove the entire amount. So you are going to remove the entire 210,945 will be removed from this amount. So you also have what? So you remove what? 210,945 from this total amount. So because we still have loss, so you have a loss carry forward. So the balance amount will now be carried forward. So this will give us what? This will be equals to this plus this to give us what? The balance of the remaining loss that will be carried forward. You also have what? So total income. So your total income will still give you what? Nil. After 2020, we have what? The next year, which will be what? 2021 year of assessment. 2021 will be 1/6. The basis period will be 1/6. 2019 to 31/5/2020. So if you look at the question again, we're also giving that value profit to be 106,174. We have what? 106 profit, accessible profit of 106,174. So we have a loss. So you have a loss brought forward of what? How much? 533. So you have a 533. So you have the value 533,250. Out of this loss, you loss relief. So you also relieve the entire amount of accessible profit, which is 106,174. So you relieve it. So you also transfer it here. 106,174. You transfer it here. So the balance will be loss carried forward. So which should be what? The difference between this, which should be equals to this plus this will give us a loss carried forward. Then our total income will still give us a nil. So you can see because of the loss being made by this company, by this taxpayer, an individual, loss being made by them from as far as 2017 year of assessment. That loss has made this taxpayer not to pay tax up to what? Up to 2021 year of assessment. So based on this information, so that is what loss relief. So the loss will give you an opportunity to what? To recover your what? So there's going to be opportunity to recover that loss from where? From subsequent accessible profit that is making what in subsequent year of assessment. So that is what the procedure of what of loss relief for what for a taxpayer. So after that, so we also have the solution in the material. So those are the solutions. So and the working. Then so that is for what for the first category of example. So we also look at another example, which is what. So we are going to look at question number 3. So we have Mr. Gunners provide you with the following information in relation to his income. So we have what 2021 trading income. So 2020. So we have what information related provide you with the in relation to his income. So we have adjusted profit or income, trade and rent. So with this this particular taxpayer is having what more than one source of income. This one is having more than one source of income. So we have both income from trade and from rent. So we have from adjusted profit or income, year ended 31/3/2020, 2021, 2022, 2023, 2024, and up to 2025. Then they also gave us notes. Capital allowance payment for 2023 tax year amounted to 60,000 naira. They require show the loss available for relief for the relevant year of assessment. If you took advantage of what? Of his rental scenario also. What category of taxpayer is this taxpayer?
Individual.
It's also an individual taxpayer. But is having what? More than one source of income. Please, whenever you see an individual taxpayer that is having more than one source of income, that taxpayer has a right to what? To use what? To use what? Current year loss relief. So that means what? We are going to adopt what? For this category of question number 3, we are going to adopt what? Current year loss relief. Why? Because what? It's having more than one sources of income. And the taxpayer is also what? Is also an individual. Please, where the taxpayer is what? It's a company, and it's also is having more than one source of income. Please, we cannot adopt what? We cannot use what? Current year. Current year is only applicable to what? To individual taxpayer. So they now say we should show how what the loss available will be relieved for each year of assessment. So how are we going to relieve this loss? Using what? Using current year loss relief. So we also have what? The basis that we normally use. So let us go to our Excel again. So we have the name of the taxpayer, which is what? Mr. Gunners. Mr. Gunners. Then we have what? So we have the information to show how loss will be released. So which is also what? Computation of total income. We want to compute his total income. Computation of total income for relevant year of assessment. So this one now, the question does not relate to commencement, but the first information we are giving relate to year ended 31/3/2020. As a business entity, tax is payable on what? On preceding year basis. If you have a year ended of 31/3/2020, when is the tax going to be paid? What will be the year of assessment? For
2021.
a year ended 31/3/2021. Thank you. 2021 year of assessment. It will be what? 2021 year of assessment. So the first tax year, we have what? 20 income. We have trading income. How much is from trading income? We have trading income of what? If we go to the question of 25, so we have trading income of 25,000. And we also have rental income, rental income of 50,000. So the totality of this will give us what? The addition of these two will give us is total income. Is total income or accessible, what? How much? So the addition of these two will give us 70,000. This income now in 2021 year of assessment, if we go back to the question, in that same 2021, let me, yeah. So I want to go back to this question now. Look at this question. As at year ended this next year, yes? I'm with you.
The accessible income is actually 75,000, not 70,000.
Okay, 75,000. Okay, when we get back there, so we have a year ended 30/3/2021. This year, the year I have here is 2021. Don't forget the rule of current year. Current year, we said is available for relief on what basis? On actual year basis. Take note of that. It's available particular amount. There is a loss in 2021. This company made a loss of 200,000 from where? From trade. There's a loss of 200,000 naira from trade. So, in this 2020 year of assessment, so you are going to this year of assessment of 2021, sorry, in this 2021 year of assessment, which is the year that loss is being made, because this loss is available on what? Actual year basis. You are going to consider that loss on actual year loss. So that loss is being made from where? From trade. How much is the loss? 200,000 naira. So that value, that loss of 200,000 naira will be considered from where? From.
Please remember to change the 70 to 75 too.
As loss.
Yes, sir. That's what I want to fix.
Made what? Made by. Out of this 200,000. Okay, 75,000. 75,000. So this loss now, the rule is that what? That loss from where? From all your sources of income. You are now going to relieve this loss. Loss relief. So loss relief now. The total income generated by this man in 2021 year of assessment happened to be what? 75,000. So he has a right to relieve loss relief now. He can relieve the entire amount of what? 75,000, which should be what? So here now you transfer it to this rate to be what? 75,000. So loss carry forward now. So you now have loss carry forward. Will now be 200 minus 75,000. That will give us how much? 200 minus 75,000.
125.
200 minus 75,000.
125.
So loss carry forward will be what? 125,000. So 125,000 will be what? Loss carry forward. After the loss carry forward, so we have what? The income that will now taxable income will now be so will now be nil of the current year basis. So that loss will come in what? 2021 year of assessment, which is the year in which the loss is being what? Is being generated. So the first one, which is what? Carry forward. After 2021, we have what? 2022 year of assessment. In 2022, SAT ended 30/3/2021. We have what? We have loss from trade, which we have taken into consideration, and we have what? Rental income. So we have income from rent, which is how much? Income from rent of what? 50,000 naira. So we have a rental income of 50,000 naira. So the other trading income is not an income, is what? Is a loss which has been considered under. So after the rental income, we now have loss brought forward. There is a loss to be brought forward of what? 125,000. This amount, we are going to bring it forward here. Out of this amount now, we are going to relieve. So loss relief. So we now say loss relief. Please, after the first year, you can only relieve this loss from where? From the source of income where that loss is generated from. This 125 that we carry forward to this is from which source of income? Who can tell me? This 125 is from which source of income? This balance we are carrying forward, this balance, 125, is from which source of income?
Trading income.
Oh yeah, now this 125 is from which source of income? From
It's
here
from
now.
trade.
Look at it. From trading income. It's here now. From trading income. So that means any trade, any loss, right? This amount, this 125, any profit you are going to relieve it from must also be profit from trade. Take note of that. It must also be profit from trade. So loss relief now in 2022 year of assessment will be what? Will be zero. You cannot relieve any amount. Why? Because there is no income from trade. So there is no income from trade. We cannot relieve. So loss relief will be zero. So after loss, so we now say loss, this same amount, this same 125,000, because no amount can be relieved from where? From in that year. So you still carry what? This 125,000. So you now have what? So taxable, your taxable income, we now give you 50,000, which will be what? Income that will be subject to tax, which is the taxable income. After 2022, we have what? 2023 year of assessment. In 2023, we are told from the question, in 2023, we are told 2023, which will be for year ended 30/3/2022. We are told that there is what? There is an income of what? 10,000 from trade and what? 50,000 from what? From rent. So 10,000 trade income, trading income, and 50,000 from rent. So let me close this so that it will not. So when you add this, it will give us a total income, which is what? 50 plus, that will give us 60,000 as the total income. 60,000 will give us the total income, 60,000. Out of this total income, we are told so we have what? Loss brought forward. So there is a loss to be brought forward of how much? Loss brought forward. Also, from the question, please, in the question, we are also told one information in the question. I want to show us that information. So let me share the question again. Look at that question. We are told here that note 60,000. We are also giving capital. We are giving capital allowance for 2023 year of assessment. So because we are giving capital allowance, we also need to take. Don't forget, I told you that loss we come before the capital allowance. So because there is also capital allowance, loss brought forward, we have what? 125,000. So out of this 125,000 now, loss relief, who can tell me how much can we relieve from this amount? How much can we relieve? 2,000. How much can we relieve?
10,000.
10,000. Thank you very much. We can only relieve 10,000 from that source where the loss is from, which is what? 10,000. So loss relief will be what? 10,000 naira. So we take it here. So 10,000. Then after that, we have a loss carried forward to be how much? 110. 115. Abi? How much would that be? 115. Is it correct? 125
Yes.
minus 10,000. That should be 115. Loss. 115,000. Capital brought forward nothing. You have a capital allowance for the year. We are told that there is a capital allowance of how much for that year? 60,000. Mention that capital allowance is restricted to what percentage? Who can remind us? Capital allowance is restricted to 66 to third. Please, what that means is that you are going to calculate 2/3 of your accessible profits. Your total accessible profit here happen to be how much? 60,000. You are going to calculate 2/3. Capital allowance relief will now be capital allowance relief. Capital allowance will be relieved to 2/3. So what you just need to do is calculate 2/3 of 60,000. 60,000 times 2 divided by 3. So that is what? Times 2 divided by 3, 40,000. So that gave us 40,000. So what that means is that you cannot remove the entire 60,000. We can only remove 40,000 due to what? Due to the restriction. So you only remove 40,000 as a result of what? The capital allowance. So take note of that. So this 40,000, you also transfer it here as what? As capital allowance to be deducted. So which is this? So out of that, you have a capital allowance carried forward. Capital allowance carried forward will give us what? 20,000 naira. Which is what? The capital allowance carried forward. Then, which is what? Which is this amount, capital allowance carried forward. Then after that, you now have what? Taxable income. Your taxable income will now be 60,000 minus 10,000 minus 40,000. So you are left with how much? 10,000 naira. So which will be what? The taxable income. So that is how to treat what? Capital allowance. So after 2023 year of assessment, the next year will be what? 2024. In 2024, so let us go back to the question. What happened in 2024? 2024, according to the question, we have what? Income. Income from trade of 20,000 and income from rent of 50,000. So we have what? You come here, trading income and what? Rental income. We have what? 20,000 and 50,000. So both are the income, the two income, 20,000 and 50,000. So the total income will give us what? A value of what? 70,000. So total income or total accessible profit will give us 70,000. Out of this 70,000, you first of all consider your what? Your loss. Don't forget, we have a loss brought. So before you consider that loss, so we have a loss brought forward. Loss brought forward. How much is the loss we want to bring forward? 115,000. So 115,000. Also, if you go back to the question, from the question, we have, so let me post it so that I can show us what I want to. From the question, this place, look at this place, year ended 30/3/2024. There is also a loss in 2024 of 20,000 from rent. There's a loss of 20,000 from rent, which we are going to relieve in what? On actual year basis, which will come in what? 2024 year of assessment. So that loss of 20,000, we are going to consider it. So we now say loss. We also say loss for the year. For the year. Loss for the year. Loss for the year. So we have a current year. Current year. That loss is from where? It's from rent. How much is it? This is loss. How much is that loss of
20,000.
20,000? So that 20,000 loss, we also put it in jacket, 20,000. 20,000. So this will now, the addition will now give us total loss. Total loss will be 115 plus 20,000. How much will that give us? 115 plus 20,000.
135,000.
135,000 as the total loss. Out of this total loss now, you now say loss, you now relieve, loss relief. So now to my question, there is an income of 70,000. How much do we think we can relieve from this 135,000? How much can we relieve? How much can we relieve? Who can tell me? How much can we relieve?
20,000 naira from trading. Then
What?
Then 20,000 naira from the 50,000 naira from income.
Income
That's
from
from
rental
rental.
income. Making how much? 40,000. Thank you very much. We can only relieve 40,000. Don't go and say because the income is 70,000. From this brought forward, we have what? 20,000, which is from trading. And from this, the one from the current year, you can relieve from any source, which is what? This 20,000, you can relieve it from where? From this rental income of 50,000. So making it what? 20 plus 20, that will be what? 40,000. So loss relief, you transfer it to this place as well. 40,000. So we have what? Loss carried forward. We also have what? Loss carried forward in 2024 year of assessment. So loss carried forward will give us how much? How much?
95,000.
Loss carried forward will give us 135 minus 40,000. How much?
95,000.
95,000 as well as the loss carried forward. So 95,000. So before we look at taxable income, we still have a capital allowance. You look at it. So you now say capital allowance brought forward. How much is the capital allowance we are bringing forward from previous year? So we have a capital allowance carry forward of how much? 20,000. Look at it. We carried capital allowance of 20,000 forward here because of what? The restriction. So capital allowance brought forward will be what? 20,000 here, 20,000. Out of this 20,000, you now come here, you are now capital allowance relief. So you are also expected to what? To relieve, to restrict it to what? Two-third. Two-third of 70,000 of our accessible profit will give us what? Two-third of 70,000 will give us how much? Two-third of 70,000 will give us how much?
46,666.
46,667. So which is
Yes.
even more than what we want to remove. Abi? It's more than the value we want to remove. So that means we can remove the entire amount. But before you remove it, you also need to be vigilant. If this total amount is what? If what you have here, 70 minus 40, will still give us what? 30,000. So that means we can remove what? The entire 20,000. So we remove what? The 20,000 as what? As the total what? The capital allowance relief. So capital allowance carry forward will give us what? Nil. So our taxable profits now, taxable income will now be 70 minus 40 minus 20. So that will give us what? 10,000 naira, which is what? Which is this amount, 10,000 naira. So after that year of assessment, we move to the next year. So which is what? 2025. So 2025, what happened in 2025? We go back to the question. 2025, we are going to have what? We are going to have in 2025 for the year ended 30/3/2024, we have what? Income from trade of 80,000. The rental from rent is a loss, which we have considered 20,000. So income from trade of 80,000. Trading income 80,000 naira. So income from trade, that's the loss, which we have considered. So we also have loss brought forward. From the loss brought forward, we have loss brought forward of how much? 95,000. 95,000. Loss is a loss. Okay, in jackets, 95,000. From this loss, how much do you think, how much can we relieve from this loss? How much can we relieve from this loss of 95,000? Loss relief. I'm asking us
80,000.
80,000 from income from trade. We can only relieve 80,000. 80,000. So you remove the 80,000. The same 80,000 will be transferred here as 80,000. So loss. So the next thing we now have what? Loss carried forward. But before you carry forward, you have to be vigilant. From this loss, we started carrying this loss of 125,000. We started carrying it forward from which year of assessment? 2022 year of assessment. And I told you that individual, they have how many years to carry forward their loss? When I was explaining, they have how many years to carry forward the
4
loss?
years.
4 years. So you have to calculate. This is year 1, year 2, 2023, year 2, 2024, year 3. So, and 2025 will be what? The last year. And after this 2025, if it's unable to relieve this loss, any balance will become what? Will now become loss lapse. So you cannot carry forward that amount again to what? To 2026 year of assessment. Why? Because what? 2025 happened to be what? The final year for that loss, which is what? The 4th year. How much are we going to, how much will become lapse now? It will now be what? 95
15.
minus 80,000. 15,000 will be what? Will be the loss lapse. So in that case, our taxable, so no capital allowance. We have relieved all the capital allowance. So our taxable income will give us how much? Nil, because we have removed that value. So after that, so in 2020, so we now go to the next year, which is what? 2026. So what happened in 2026, according to the question, we have income from where? From trade of 30,000 and rental income of 10,000. So trading income, 30,000. Then we also have rental income of 10,000 naira. So this will give us total income. This will give us total income total income of 40,000 naira. Out of this 40,000 naira, do we have any loss brought forward again? Do we have loss brought forward? Can we bring this loss of 15,000 to this place? Can we bring this
No.
50,000 loss to this
No.
2026?
No.
No. Why? Because it has become lapse. After the 4th year, if we cannot relieve it, it become what? A lapse loss. So it will become a loss lapse. So you cannot bring any loss here. And there is no capital allowance again. So that same amount will also be what? Will also be what? Be the what? The taxable income. So loss brought forward will be what? Will be 0, nil. After 4 years, if you cannot relieve it, you cannot take it, you cannot relieve it for more than 4 years. So in the exam, you don't need to put this. So I just include it in order for understanding purpose. So our taxable income will still give us what? 40,000 naira. So that is how to implement what? Carry forward loss relief. So when we have what? A scenario of what? Carry forward and what? A scenario of what? Current year. So this one we just did now is for what? Current year. So the first one we did is what? Is for what? Carry forward loss relief. So that is what? How to apply it. So the examiner will not tell you apply what? Carry forward or current. So the question given to you will what? Will determine. Once you see any question that relate to individual and the individual is having what? More than one sources of income, with that you are expected to apply what? Current year loss relief. So take note of that. So any question?
Sir, I have a question, sir.
Okay, I'm with you.
From the 2023, because I'm just batting now, you have your capital allowance, your loss of 10,000 naira, and you also your loss of 10,000 naira, and also your your
I'm
capital
coming. Oh,
allowance.
wait. Okay. In the 20 what? 2023, Abby? 2023. Yeah,
Yes,
okay. How we get what? This loss of 10,000, Abby?
10,000 naira. Yes, sir.
And this capital allowance, Abby? Of
Yes, sir.
40,000 naira, Abby? Okay.
Yes, sir.
Okay. Look at it. I'm going to look at the screen. I'm going to share the question now. Look at the question. In the question, from this question now, we have a loss brought forward of 125,000, Abby? Out of
Yes,
this
sir.
125,000, loss relief, you know this 125,000 is from which source of income? Which source
From
of
trade.
income? From trade, Abby?
Yes,
How
sir.
much is the income that we generate from trade in 2023?
In 2023.
Yeah, how much is the income we generate from trade in 2023? Look at it. 10,000.
10,000.
Yeah, that means you can only relieve this 10,000
10,000.
from. Yeah, that's where we got this 10,000 from.
Okay. That means from the 2024 now, the loss relief will be 40,000 naira.
Yes, now. Yeah, from the 2024, the loss relief is. Let me share back this thing. The 2024, the loss relief is 40,000. Look at it. 2024, loss relief is 40,000. So that's how we got one. That's where we got the 10,000 from. And that's why we got the 40,000. But for the capital, yeah?
I'm getting what you are saying, sir.
Hello?
You know, from the loss balance brought forward now for 2024 now, we have 115,000 naira. And then
115,
from our
yes.
question, yes,
Our
our
question
current
gave
year
us
loss,
current year loss of 20,000.
1,000 naira, which is
Yes.
130. Our total loss is now 135,000.
Yes.
But
Out of this
the loss relief is
135,000,
there.
look at out of
Yes,
this
sir.
135,000, you can only the one brought forward 115. You can only remove 20,000 from it. Are you getting it? You can
Okay.
only remove 20,000 from it because this 115 is from trade. You remove 20,000 from it, and this 20,000, this new 20,000 is from rent. You have a right to remove it from this 50,000. So if you now add 20 plus 20, that will give us the 40,000 that we arrive at here. 20,000 from trade and 20,000
20,000
from trading.
from rent.
Yes, 20,000 from trade and 20,000 from rent. Yes.
Okay.
Then for the capital allowance, we have a capital allowance of 60,000 naira. Capital allowance is restricted to 66 2/3, which is simply stated as 2/3. What you just need is look at 2/3 of your accessible profit. Our accessible profit here is 60,000. This 60,000 is given to us in the question. It was provided in the question. If you look at the question in the notes, the question says capital allowance claiming for 2023 tax year amounted to 60,000. They gave us. But you cannot remove the entire of 60,000 because your capital allowance is usually restricted. You restrict it. So you now restrict to 2/3. 2/3 of 60,000 will give us 40,000. So that's why we got this 40,000 from. Is it clear now?
Yes, sir.
Okay. Any other question?
Yes, sir. Please, what I want to confirm is that this capital allowance that
Any
is
other
2/3
question?
of. Yes, sir. Can you hear me, sir?
Accessible profit?
Okay, so
Yes.
yeah, so this
Hello, I can
capital
hear you.
allowance relief of 2/3, which is 2/3. So since we are already taking this loss relief of 10,000, I was expecting that it to be 2/3 of this 50,000, which is the balance instead of the 60,000.
Is okay. My question is capital allowance. They say is 2/3 of accessible profit. Is 50,000 your accessible profit?
No, it's
No,
60,000.
it's 60,000. So you base it on accessible profit. Take note of that. Not
Okay,
on when you
so
have removed the loss.
in
It's
that
on
second year situation where we have 70,000 and the amount we have left is 30,000. So when we now calculated the capital allowance, like the 2/3 of this 70,000,
70,000 is giving us
and we are
around
getting
40 something
46,000.
thousand.
So what is
Yeah,
our
because the
yes,
46,000 is more than this. So
yes.
what we need is just
So
20,000. Okay. What
okay,
if
but
what?
what will happen in a situation whereby like
Yes.
the
If for
amount we
instance,
have
I
here?
know what assuming amount we have here now happen to be, let's say, 60,000.
Yes.
Do you get it? So what you are going to put here with that amount, it will be that amount you got, which is what? 46,667 is what you are going to put here as capital allowance relief. Is it clear? Which will be 2/3 of this amount, the third of 70,000. Hello?
Yes, sir, but it will not be more than out of this 70,000 now, we already remove 40,000. We now have 30,000 left. So if the capital allowance is now 46,000,
That means it will not be, yes, it will not be more than 46,000. Hey, good question. It will also look at this. So that means you are going to consider it will not be 70 minus 40,000. You are left with how much? 30,000, Abi? So instead of removing, because the 2/3 cannot accommodate what you have left, cannot accommodate that information, you are going to restrict it to what this value can accommodate. Are you getting me? You are
yes,
going
sir.
to restrict it to any balance that you have after removing your loss. Because if we don't have loss, you'll be able to remove that value straight away. But because there is a loss, that's the reason why that information is being restricted. So as a result of that, you have to now look at how much is now available. So what is now available? If you remove 70,000 minus 40,000, you are going to have 30,000. What you are going to state here will not be 46,000 again. It will now be 30,000. Because of what? Because what value that is available is not what? It's not up to what? The two-third. You get it? You have to also work in line
Yes,
with
sir.
what?
So that means
Two-third
we are
and
not
the
going to now
value
carry
available.
the.
Yeah, yes, thank you. You are going to carry the balance to next year.
Okay, sir.
Any other question?
Hello, sir.
Hello, yes.
What of the loss we live in 2025? Because if I can look at the question now, for the 2025 now, the trading income is 80,000 naira.
Yes.
Yes, sir. But how did they arrive to that 80, sir?
It's given to us in the question. If we go to the question, yeah, ended 33, 2024, you have what? Rent is the loss, which is 20,000, which we have considered. So income, because income from trade is 80,000, and you have a loss brought forward from trade of 95,000, you have a right to remove all the loss from this 80,000 because they are from the same source. So that's why we remove the entire 80,000 from this one, trading income. Is it clear to you now?
Yes, sir.
Any other question? Any other question? So in the absence of no question, so this is where we are going to stop the class for today. So we are going to continue the class next week. So have a lovely day ahead and take care of yourself. Thank you.
Hello, sir.
Okay.
I don't know if I can come to your DM because this is my first time in class. I didn't really join from the beginning.
From the beginning.
So
Okay.
I need the materials like this note for other topics covered so
Topics.
far. So
Okay, covered. No problem. You can send me a message. I will. No problem.
All right, sir. Thank you.
Yeah, you're welcome. Okay, all right. Thank you.